I don't know about you, but lately it feels like everyone around me is getting laid off. And honestly, a lot of people are scared because everything's gotten more expensive at the same time. Food, holidays, just the cost of getting by. And every week there's another scary headline where you keep hearing that one word, recession. But then you look at the stock market and it's doing the complete opposite, where it just keeps hitting record high after record high after record high, no matter what is happening in the actual world. So how does that make any sense? How can everything feel a little bit broken while the market just keeps winning? And for a lot of people, it starts to feel like this whole thing is rigged. Like the rich people, of course, keep getting richer and everyone else is just watching from the outside. And it doesn't matter if you have been investing for years or you never bought a single share. For some people, it can still feel that way. But here's the thing, the stock market is not a casino. It's a machine. And once you understand how that machine actually works, it stops being scary and it starts to make so much more sense. And here's the part that's worth remembering before we even start. Investing in the stock market has quietly been the #1 way for everyday people to have built real wealth for the last 100 years. Nothing has really beaten it, and it's a lot simpler than what most people think. So what I'm going to do in this video is I'll show you how this machine works, why it keeps climbing higher even when life feels harder, and the one thing about it that most people get completely wrong. So stick with me because that last part will change completely how you look at your money. By the way, my name is Zack, and I'm a wealth management and financial planning professional. I've been investing for over 10 years. I've grown my own portfolio into the millions, and I've also coached over 2,000 high net worth individuals. So everything I'm about to explain, I've actually done myself. So here's the first thing, and it's the one that almost everybody gets wrong, because the stock market is not a scoreboard for the economy. Most people just assume that these two move together, where if the economy is good, then the market goes up. But if the economy is bad, then the market goes down. But it's really not how it works, because the market doesn't care about how your month is going. It only cares about one thing, which is what these companies are going to be earning in the future. That's it. So when the market goes up, it's essentially just making a bet on years from now, not on what's happening today. And once you separate those two things, half of the confusion is already going to disappear. And keep in mind, the market pulling back isn't some rare disaster, because it's something that happens every single year. And some years it's just a small dip of about 5%. Some years it's a proper drop of 15%. But on average, it falls about 14% at some point in the year. But it still tends to finish the year higher. So a down patch is not really a problem when it comes to the stock market. It's again just something that is part of the game. And it's probably one of the biggest worry for most investors who are looking at the stock market. So okay, if it's not following the economy, what is actually driving its price up higher? It really runs on three things. And the first one surprises people. The companies pulling this market up are making an absolute fortune. There's no other way to say it. A small group of giant tech companies now earn a massive chunk of all the profit in the entire world. And here's the thing, you already know almost every single one of them because it's the phone in your hand from Apple, and it's the search bar from Google that you're using, or it's the site that you're ordering products from, which is Amazon, and the company that makes chips inside almost everything, which is NVIDIA. You're a customer of these companies on a daily basis, probably without even thinking about it. And that's the point, that they run the world and the whole world is paying them. So even when the average person is struggling, these specific companies are still printing money. And because they're so big, they pull the whole market up with them. And I mean genuinely huge. Just so that the scale lands, one single company, NVIDIA, is now worth about as much as the entire economy of Japan. One company worth close to everything a country of over 120 million people makes in a whole year. And that is really the first gear. And the second one is money printing, where governments all over the world are carrying enormous amounts of debt. So they keep creating more money. And the proper word for this in finance is liquidity. And honestly, it's probably the biggest driver of all of them. When there's that much new money floating around, a lot of it ends up back in the stock market, and it pushes the prices up almost no matter how things feel out in the real world. And here's the part that most people miss. Sometimes the market isn't even really going up at all. It's just that the money in your pocket is quietly losing value underneath it. And that's actually one of the quiet reasons to be in the market in the first place, because some of your return over time is not just because these companies are growing, it's more that your cash is losing value due to inflation, and the market is holding its worth while that is happening. So being invested also helps to offset the money in your pocket slowly shrinking. And the third gear might be the most powerful one from the lot, even though it's the quietest. It's that every single month, new money is flowing into this market automatically, whether anyone is paying attention to it or not. Just think about how people get paid, and a slice of almost every paycheck goes straight into a pension or retirement fund. And those funds then take that money and buy stocks every single month, no matter what is happening in the news. And it even goes further than that, because if you work at one of these big companies, you've almost certainly got a stock plan where you get your salary, and on top of that, you get to buy the company shares, often at a discount. So without really thinking about it, you're buying a stock every single paycheck, and millions of people are doing exactly that all at once every single month. And on top of that, the companies themselves spend a fortune buying their own shares back. So once you put all of this together, there's this constant, steady buy pressure under the whole market month after month that is just building it to keep going up over time. So that's the machine, essentially a small group of giant but wildly profitable winners, a flood of printed money looking for somewhere to be spent and go, and a steady river of automatic buying every single month. Once you put those three together, basically you got your answer. The market can keep breaking records while your rent still hurts. And because the gears running the machines are just not about the things of how we everyday people feel on the day-to-day. Now, here's the part that I really want you to get, because this is where most people end up doing nothing and trip up. So they look at the market and it's sitting at all-time highs, and they freeze because they think it's too expensive, it's not the right time to start, what's the point of investing today? But when you look at the actual history of this market, the good runs, which are the bull markets, they tend to last for many years and they climb a huge amount. But then the bad runs, which are the bear markets, they are short by comparison, but also look much smaller. Look at any long-term chart of this and the pattern will jumps right at you, where long climbs up, short, sharp dips down, and then new highs are followed again. So a record high really isn't the scary part that most people think it is. It's actually a normal state of the market where it spends most of its time actually climbing higher. And everyone who invested at the last all-time highs, it's already up because the market just went and made new all-time highs again. Now, the market does still give you chances because it pulls back again 10, 20% on a regular basis. And here's how I personally approach that, because there's nothing wrong with starting slowly, and some of the smartest people that I have worked with never go all in at once. They actually start small and keep a decent chunk of money, the cash, earning a bit of yield by being patient to deploy that capital when the market actually pulls back the 10, 15, 20%. So it's really nothing fancy. And they don't expect to make money straight away, because plenty of times you will buy in and the market might drift lower for a while before it ends up turning, which is, again, it's completely normal. The patient people win here when it comes to investments, not the ones who panic and overthink every single headline. And that's the last thing that takes the pressure off, because even if you feel late, the reality is that you are not. There's always something being created somewhere. Sometimes it's stocks flying, sometimes stocks are flat, sometimes it's the gold that is booming, sometimes it's a big story, which is right now it's AI, after that it's going to be robotics, and after that it's going to be energy, and then there's always the next big thing where you find opportunities in the market to be early to new themes and give you the opportunity to even outperform. So if you are just starting today, you honestly haven't missed anything. The opportunity in front of you is just as real that it has ever been. You don't need to find the perfect one and the next big thing with all of your capital. So that's the real answer to the question I asked at the very beginning. And honestly, the more I've looked into it, the more I realized that the market being disconnected from real life is not a glitch. It's just that the machine is doing what it has always done, where a few giant companies are making a lot of money, governments are printing more money, and then there's steady monthly buying, over time lifting this whole thing higher, while the everyday life can feel completely different from the markets. And that's the reason I wanted to make this video simple, because once I understood how the machine actually works, it just stopped scaring me, and it changed the way I look at my own money. And that's the shift that I hope for you, not to feel shut out by the headlines or to think this is too late for me to start, there's no opportunities anymore. And if you want to hear more content and information like this, then I send out a free newsletter where I break down exactly what is going on in the markets in a way that is simple to understand and it makes sense. The link to sign up for that is in the description below, so go ahead and grab it, and I'll see you in the next one. Peace.